Welcome to Project Money with me, Elion Mendoza. We're here to discuss all the money stuff that school didn't teach us. Hey everyone, thanks for tuning in. In my last episode, I went over 5 questions about money that you're too embarrassed to ask. I talked about credit scores, 401ks, IRAs, how much you should save, and how to make a budget. Essentially, the things everyone else assumes you already know, when in reality, no one teaches us basic personal finance. So this week, I want to answer 6 questions you're probably too embarrassed to ask about investing. So let's get started and continue building our personal finance foundation. Okay, number 1, what's the difference between investing and saving? Saving is the broader action of not spending your income and deferring your consumption into the future. We typically save money for different purposes and create different savings goals. For example, emergency savings, a vacation, a home, or even investing. Investing is a specific action we do with our savings. The definition of investing is to allocate money with the expectation of some benefit in the future. Typically, we use savings for more specific goals or for situations where we can't risk losing any money. Investing generally consists of broader, longer-term goals like a business, building wealth, or no longer needing to work at a specific age. And as with most things, there are no hard rules. Sometimes your savings and investing goals will cross over or may be difficult to separate. Now, moving on to question number 2. What's the difference between a share and a stock? For the most part, the terms stock and shares are used in the same manner to describe fractional ownership in a company. From a technical perspective, their definitions vary a little bit. For example, stock is the more general term. Stocks usually refer to ownership in several companies. Someone might say something along the lines of, I own a few stocks, referring to having stock in Apple, Tractor Supply Company, and Samsung. The term shares, on the other hand, oftentimes refers to ownership in a single company. For example, someone might say, I own 50 shares of Apple and 100 shares of Samsung. Okay, the third question is one that I get on a regular basis. Do I have to pay taxes on my investments? The short answer is most of the time. If an investment pays you an income, whether it's a dividend or an interest payment, you'll most likely owe taxes on that income. If you sell an investment for a gain, you'll most likely owe taxes on that gain. And don't forget, depending on which state you live in, you may also have to pay state tax in addition to the federal taxes. Now, there are a few ways to get around paying taxes on investments or minimizing your taxes. Usually, the easiest way is by investing in a tax-free account like a Roth or a tax-deferred account like a traditional IRA, a 401k, 403b, or 457b. As the name implies, tax-free means you won't owe taxes on the investments in the tax-free account. And tax-deferred means you don't have to pay taxes today, but you'll have to pay them sometime in the future. Lastly, another way to not pay taxes on your investments or to at least lower your taxes is to move to a low tax or a no tax state. Now, moving on, another question that I frequently get from people just starting out is, where do I go to invest? Overall, the best places to invest are going to be the major brokers like Fidelity, Schwab, E-Trade, TD Ameritrade. At this point, they don't really have any account minimums, and most of them give you free stock and ETF trades. Most mutual funds often trade without fees as well, but you'll have to check as some funds or share classes will incur trading fees with one broker or another. If you plan to only invest in Vanguard funds, Vanguard does have a really good platform to invest in as well. I also want to mention that banks are actually terrible places to invest in. I'm not talking about bank stocks either. I mean actually opening an account at like a Chase, a Wells Fargo, etc. I've noticed that some brokerage accounts at banks still have account minimums, or they require you to link a checking, a savings, a credit card, or even open up a new account with them to avoid account fees. Now, along the lines of investing, what is a mutual fund? A mutual fund is a financial vehicle that pools a lot of money from a lot of different investors and then uses that money to buy all sorts of investments. It can be anything from stocks, bonds, real estate, to even exotic alternative assets. Mutual funds can be active, where the fund manager and their investment team try to beat a specific benchmark, like the S&P 500, or a mutual fund can be passive, where the fund manager and their team try to mimic a specific benchmark, like, say, the S&P 500. Mutual funds do charge fees, and typically active funds or highly specialized funds charge higher fees, while passive index funds tend to charge lower fees. The advantage of a mutual fund is that you can buy a diversified portfolio with little upfront money. For example, a Russell 1000 fund will give you access to 1,000 stocks, and you may only have to invest as little as $25. An ETF is similar to a mutual fund in that it's an investment vehicle that pulls a lot of money from a lot of different investors and uses that money to buy different investments. Just like mutual funds, ETFs can be both actively or passively managed, and their fees are representative of that as well. The main difference between an ETF and a mutual fund is that an ETF can trade intraday, meaning if you place a trade at 10 a.m., it executes almost instantly. This feature doesn't really matter if you're a long-term investor who holds a position for several months or years at a time. But for traders, an ETF allows them to trade indices or even entire economies throughout the day. And lastly, I'm going to answer a bonus question. This is one that people always ask me when they find out that I'm a financial advisor, and I usually give them an answer they weren't expecting. And that is, what's the best investment that's going to make me a lot of money? And the answer to that is pretty easy. It's you. I've mentioned this before in past videos, but the absolute best investment you can make is in yourself. Learn a new skill that will get you promoted, a raise, or even consider starting your own business. No single investment will ever pay off more than your ability to make more money with new skills. Okay, with that, I hope this video answered some of your questions. I know to some people, these questions may seem basic, but in reality, most people don't know how or where to begin investing. For some reason, it's something that school forgot to teach us. Please smash the like button, and depending on which platform you're on, please subscribe and follow to help me grow my channel and bring you more content. Till the next time, adios.